Will central bank digital currencies, CBDCs, replace traditional crypto? The emergence of central bank digital currencies, CBDCs, has sparked intense debate in the financial world. The question of whether state-backed digital assets will eclipse and eventually replace more established cryptocurrencies like Bitcoin and Ethereum is raised as more nations get closer to introducing their own digital copies of their national currency. Traditional crypto assets provide unparalleled decentralization, anonymity, and a safeguard against centralized authority, whereas CBDCs promise increased stability, government oversight, and broad adoption. It is essential to comprehend the distinctive characteristics and possible conflicts between CBDCs and conventional cryptocurrencies in this quickly changing financial environment. Will the crypto revolution come to an end with CBDCs, or can they coexist and each serves different purposes in the digital economy? Examine the differences between these two significant financial breakthroughs to see if CBDCs can actually take the place of the decentralized behemoths that have dominated the digital currency market up to this point. 1. Comprehending CBDCs in relation to conventional cryptocurrencies. It's important to understand the distinctions between regular cryptocurrencies and CBDCs before determining if they can be used in their place. The central bank digital currencies are electronic versions of a nation's money that are issued and controlled by the central bank. Like cash, but in digital form, they constitute a direct claim on the central bank. With the support and supervision of a reliable government organization, CBDCs are intended to provide a safe and reliable digital substitute for actual currency. Traditional cryptocurrencies, on the other hand, such as Ethereum, Bitcoin, and others, are decentralized digital currency. They use blockchain technology to record transactions on peer-to-peer networks without the need for a central authority. These cryptocurrencies' main selling point is their decentralized structure, which offers a financial system independent of governmental regulation. With features including limited supply such as Bitcoin's 21 million coin ceiling and enhanced financial privacy, cryptocurrencies were intended as a disruptive alternative to CBDCs, which seek to preserve the framework of the current fiat currency system. Traditional cryptocurrency and CBDCs both provide digital solutions, but their main goals are different. While traditional crypto seeks to offer an alternative to centralized financial systems, CBDCs are meant to upgrade and digitize fiat currency. This fundamental distinction will be crucial in deciding if CBDCs can eventually take the place of conventional cryptocurrency. 2. Decentralization versus government control. The degree of control and supervision is one of the most important distinctions between CBDCs and conventional cryptocurrencies. The issuing government or central bank has complete control over CBDCs. For customers who appreciate security and government support, CBDCs are a safer option because of this control, which makes it possible for a stable and regulated financial environment. Through CBDCs, central banks can directly carry out monetary policy, modifying interest rates or better managing inflation. Traditional cryptocurrencies, on the other hand, run on decentralized networks. One of their primary draws is the financial independence they offer because to the absence of a centralized authority. 3. The significance of user autonomy and privacy. Another important feature that distinguishes CBDCs from conventional cryptocurrencies is privacy. A lot of central banks are creating CBDCs with integrated transaction monitoring systems. The goal of this degree of surveillance is to stop illicit activities including fraud, money laundering, and financing terrorism. However, consumer privacy is sacrificed in the process. Concerns over financial monitoring and loss of autonomy are raised by the possibility that central banks might monitor all digital transactions in a CBDC system. Traditional cryptocurrencies, however, provide different levels of anonymity. Other cryptocurrencies, such as Monero and Zcash, place a higher priority on privacy, enabling users to perform transactions without disclosing personal information, in contrast to Bitcoin, which is pseudonymous, meaning that transactions are public but not directly related to personal identities. 4. The financial system may be affected. By offering a more effective, safe, and transparent digital currency alternative, CBDCs have the ability to completely overhaul the current financial system. Cross-border transfer speeds could be increased, transaction costs could be decreased, and payments could be streamlined with the use of CBDCs. Central banks can improve their understanding of economic activity and their ability to handle financial crises by digitizing fiat money. But conventional cryptocurrencies have special benefits that CBDCs would find difficult to match. Peer-to-peer transactions are made possible by cryptocurrencies like Ethereum and Bitcoin, which function on global, decentralized networks that do not rely on middlemen. Traditional cryptocurrencies are becoming a vital instrument for financial inclusion in many developing nations with restricted access to banking systems. They give users a way to keep value in a digital format and provide an alternative to erratic local currencies. 5. CBDC adoption challenges. Although the concept of CBDCs is becoming more popular, a number of obstacles may prevent its broad use. Cybersecurity is one of the main issues. In order to prevent fraud, digital counterfeiting, and hacking, a CBDC system would need to be extremely secure. Furthermore, it may be difficult and expensive to integrate CBDCs into the current financial infrastructure, necessitating modifications to legal frameworks and payment systems. Traditional cryptocurrencies, on the other hand, already have a strong ecosystem that includes wallets, exchanges, and decentralized apps dApps. It might be challenging for CBDCs to overcome the solid market foundation established by the popularity of crypto assets, particularly if they are unable to match the technological innovation and user experience of already existing cryptocurrencies. 6. The crypto market is affected. The traditional cryptocurrency market may be affected in many ways by the launch of CBDCs. On the one hand, CBDCs may help digital currencies become more widely accepted by making it simpler for individuals to comprehend and utilize them. By attracting more users to the digital banking ecosystem, this greater familiarity may have an indirect positive impact on traditional cryptocurrencies. However, because governments may see decentralized cryptocurrencies as competition, CBDCs may result in more stringent regulations. The use of some cryptocurrencies may be restricted, and innovation may be stifled by this regulatory pressure. On the other hand, traditional cryptocurrency might still be a thriving niche market for consumers who value privacy. 7. The future, replacement or coexistence. As both technologies advance, there will probably be ongoing discussion over whether CBDCs will eventually supplant conventional cryptocurrencies. Traditional cryptocurrencies offer privacy, decentralization, and financial autonomy, while CBDCs offer stability, regulation, and government support. These disparate characteristics imply that rather than being direct rivals, the two might coexist and fulfill distinct functions. A mixed financial environment may emerge in the future, with traditional cryptocurrency continuing to be widely used for cross-border transfers, long-term investments, and decentralized finance (DeFi), while CBDCs are utilized for routine payments and government activities. Both systems might prosper with this hybrid strategy, meeting the various demands and tastes of users. Instead, than taking the place of conventional cryptocurrencies, CBDCs can enhance the larger digital currency ecosystem by offering consumers a variety of choices catered to their own financial objectives. In summary, central bank digital currencies (CBDCs) are unlikely to completely replace traditional cryptocurrencies, even though they offer stability, regulation, and government support to the digital finance industry. Those looking for financial independence and privacy continue to be drawn to the decentralized, autonomous nature of cryptocurrency assets like Ethereum and Bitcoin. It's more likely that CBDCs and conventional cryptocurrency will coexist, each with distinct functions inside the digital economy, rather than going up against one another. As the future of money changes, This hybrid strategy can provide the best of both worlds and open the door to a more flexible and inclusive financial environment. Let us know in the comments what you think about the Will Central Bank Digital Currencies, CBDCs, replace traditional crypto, and don't forget to like, subscribe, and stay tuned for more captivating content on our YouTube channel.